Cool. We should be live in 5, 4, 3, 2, 1. I'll do the intro. Ninja Bean is your camera's not quite facilitating that for you. Don't worry, I'll do the camera. Is your share screen working?
Yeah, my share screen's working fine.
Okay. Do you want to bring up the disclaimer and I'll read through?
Absolutely. Yes, once you made me co-host.
Done.
All right, guys. It's only 5 minutes past 8 p.m. UK time, Monday, the 24th of July, 2023. Welcome to another episode of The Game. Every single Monday, 8 p.m. to 9:30. Free weekly webinar. And disclaimer.
Cool. So all our content is for education, information, and entertainment purposes only, and should not be considered as investment advice or recommendation to buy, sell, hold any assets, or place any trades. Please do your own research. Keep scrolling down, please. Our content is intended and should only be used for informational use. It is very important to do your own analysis before making any investment, which should be based on your own individual circumstances. You should always take independent professional advice from a professional advisor or independently research and verify all and any information you may find on our show that you wish to rely upon. Whether you wish to make an investment decision or otherwise, all investments come with what?
Risk.
Please do your own what?
Research.
We are not financial advisors, do not intend to be perceived or received as financial advisors. However, we are working in collaboration with several accredited advisors. If you're unable to mitigate your risk, then please contact us immediately so we can refer you to an accredited financial advisor. We're working with Charlie Luku of St. James's Place. We're working with Victoria Nabarro and Emmanuel Ascuo. So if you need any financial advice or before making any trade or investment, especially in today's show, because this is a very very uniquely positioned episode, we will say, so people may get a little bit excited with what we have going on today. So yeah, be very, very diligent. Okay, cool. So let's get into it. Don't want to waste any time because we have two very, very special guests here. It's an episode today where those that know. Those that don't know are about to know. And on Blockchainsensei, the game, one thing we are always talking about is tokenization of real world assets. One thing we're always talking about is deep diving and understanding what institutions do, the moves institutions are making, and how it's changing the landscape. And also, we always talk about is regulation. And both of these two people come from platforms that are actually regulated crypto and security exchanges, which, yeah, this positions these two companies. I'm going to say it. I said it to Ninja and I said it to Keish. I think both of these two companies are better positioned than Coinbase. Now, that is quite a big statement, but you know me, guys, I like my big statements. I genuinely think INX and Swarm have got the best positioning right now for what the institutions want to do. Yeah. So without further ado, we'll let these two lovely guests introduce themselves. Katie, do you want to go first?
Yeah, I feel like you've just delivered the punchline, so now I've got to serve the meal. hopefully it will be good enough. Excuse me. So my name's Katie Evans. I am Chief Business Development and Comms Officer at Swarm. Swarm, in a nutshell, is the first regulated DeFi platform. And what that means is we are responsible for bringing real-world assets onto blockchain, so through the process of tokenization. And then we've set up a trading infrastructure that is both regulated and decentralized so that people can access these assets whilst benefiting from transparency of the blockchain, 24/7 trading, and also, very importantly, we think, self-custody. We are regulated in Germany under BaFin, and which we believe is one of the, or we know is one of the top sort of tier jurisdictions. So we think under that very credible regulatory umbrella, we can blend the security of regulation with the innovation of DeFi and actually come up with some really cool products that we know people want to use and trade.
And Bob?
Thank you, Michael. I'm Bob Ejodame. I've been in financial markets for just under 20 years now. I come from a regulated background. I've worked for large interdealer brokers. And about 3 years ago, I joined INX. INX had just gone through a 2.5-year process by the time I joined. They'd just gone through a 2.5-year process of getting approval from the US SEC for the first ever blockchain IPO. So a full F1 prospectus IPO whereby investors were going to be receiving tokens on the Ethereum blockchain. Once that IPO was approved, the IPO then commenced, and 9 months later, we had raised $85 million from 7,200 retail investors from about 64 countries around the world. And the company was founded in the wake of the ICO bubble back in 2017, and the thinking and the ethos of the founders was you should be able to raise money from retail investors around the world, but those retail investors should be afforded the same protections as they would in a regulated environment. And so we set out to raise the capital in that IPO in order to build a trading platform where we would list and where we would offer the listing and trading of digital assets. And so we did that. We acquired multiple licenses. We roll up to numerous regulators in the United States. Licenses include an SEC approved licensed broker dealer, a transfer agent. We are an ATS, which means we can trade digital securities on our secondary marketplace. And we also have 44 state money transmitter licenses that allow us to offer a cryptocurrency exchange. And so we blend all of these services into one platform called INX One, where the customer is able to access a marketplace where there are companies raising capital in the form of security token offerings, or to trade security tokens on that ATS, or to trade cryptocurrencies on the crypto platform, and do all of this in a way that's integrated. So for example, you could on-ramp using crypto, convert that into fiat, and use that fiat to buy security tokens and vice versa. So we are now, we've launched this platform about 9 months ago. We now have 7 companies that are raising capital, with more in the pipeline. We've made a few exciting announcements, some of which I'll go to in more detail.
Wow. Yeah, there was a very recent big announcement from you guys with
Which one, Michael? Because there's been quite a few.
Well, there's a few that I've done a little bit of research on you guys. When I first met you, Bob, I think I first met you, it was about a month ago now.
It was about a month ago. So that was the 10% acquisition by Republic. So Republic, who acquired Seedrs. So Seedrs was the UK's largest crowdfunding platform. Republic was the US version of that. They acquired Seedrs a couple of years ago, and so Republic has now taken a 10% stake in INX with the option to acquire 100% of our company. So that was the big news as of a month ago. As of a week and a half ago, the big news was that Casper Labs, which is a pretty well-known layer 1 blockchain and enterprise technology provider, has chosen INX to tokenize and list its equity. And so in September, the shares of Casper Labs will be available for investors on our secondary exchange in tokenized format.
Crazy. So the additional one that I looked at was your relationship with Sikpa.
That's also very interesting. So yeah,
which I think is.
Yeah, I'll just summarize that in, so the INX group, we have a partnership with a company called Sikpa. Sikpa is a Swiss company that has, for over 100 years, provided solutions to central banks for cash, for currency. so security types of solutions. And SIGPA and INX have teamed up to develop wholesale and retail CBDC solutions.
Wow. Wow. So this brings me beautifully on to the first important question. Is why the hell is tokenization of real world assets even important? Katie, do you wanna chime in on why would anyone even care? Like why should anyone care? How does it benefit anybody?
I had a nickel for every time this question was asked. I would be very rich. It's important for different people for different reasons. So, for example, let's go with the easy ones. If you're already on chain and you are very well used or very well versed to the volatility of crypto assets, and you need to diversify into less risky or even uncorrelated assets, then having different options available on chain is really important for that. And this isn't just for retail traders, you know, who might only have, I don't know, $500 in their wallet who want to go into something else. We're talking about large crypto institutions who are managing treasuries on chain that need to have a diversified portfolio to choose from. So people who are already on chain are already very much seeing the benefits of things like tokenized public stocks and US treasuries moving into the DeFi space. And that also becomes important for when you want to do lending and borrowing activities as well. It makes for a more stable environment. We saw certainly with last year with the sort of leverage crises with Celsius and FTX, they were very much that. When one crypto toppled, the rest fell with them. So being able to have different types of asset classes on chain is really important. The next group of people I'll go to is from the more traditional side, which is where it sounds like both Bob and my background sits in. And if you are looking at this from an economist perspective, being able to take cost out of the economy and sort of trading activities is really important for protecting P&L. So, trading via smart contracts disintermediates that whole process. So being able to have everything that's transparent, that's disintermediated, it's automated through smart contracts is actually a really serious value proposition when we are plagued with things like with high inflation. And we need to find ways to make the system smarter. So that is why institutions are looking at this space. The next group of people I'll come to are people that probably aren't even on this call. They're people who sit probably in non-Western societies that don't typically have access to brokerage accounts or even bank accounts that can go and trade, you know, regular stocks or financial products that we kind of almost take for granted. I sit in the UK and I've never had a problem with opening up a brokerage account. I actually used to work for eToro, one of the largest retail trading platforms. So never had a problem with opening those accounts and getting access to those financial products. But if you're sat in a place like Nigeria or the Philippines, it's not so easy. So being able to move into tokenized products is a better way, again, of you being able to go into less risky asset classes. And particularly if you sit in a country where your local currency is plagued with hyperinflation, going into these asset classes becomes a very credible and real option for you once they start moving on chain. So those are sort of the main categories of people that we certainly talk about when we're asked about why tokenize. Bob, I don't know if I've just railroaded that response completely, if I've left you any room whatsoever, but feel free to jump in if there's anything else I've missed.
I would throw in fractionalization, for example, right? So taking highly illiquid assets, a car collection, 100 super rare vintage cars somewhere in a ultra safe garage somewhere. How do you sell any of that? How do you access liquidity of any of that? Or commercial real estate, huge warehouses. These are highly illiquid assets where you kind of have to have a buyer for the whole thing. Well, when you fractionalize and tokenize, then you can sell this thing off in tiny chunks. You can sell parts of it. You can retain parts of it. So fractionalization is another way to look at it. And then just to echo kind of what Katie said there, the cost cannot be underestimated. And blockchain, and tokenization isn't the first time technology is coming in to provide massive cost-saving opportunities. I worked for a company that acquired a startup that was able to save back office costs for FX transaction settlement processes by 90%. And when you can save 90% of operating costs that run into the hundreds of millions, you've solved problems. You have the attention of those institutional players. So in the case of INX, I could also come from a different point of view, which is if you run a security token offering for a company that's raising capital, and that company is able to access investment from thousands of retail investors around the world, say with a minimum investment ticket size of $1,000, then you've effectively taken what used to be the playground of the VCs, what used to be exclusively the playground of the VCs, and made that a playground where retail investors from all walks of life and all parts of the world can actually participate in and enjoy those same opportunities of getting into a brand new investment opportunity from day one, as opposed to after 6-7 years when that company goes to IPO publicly. So so there's a raft of benefits that come out of tokenization, and I think the key thing, and this is kudos to you guys here at Blockchainsensei, is to ensure that the education happens and that people actually understand what these opportunities are and how accessible they are to them.
I want to. Everyone on the show knows me. I love playing devil's advocate. So I'm 100% all for tokenization of IPOs. However, and I'm going to ask this question because I've asked this question before. What's your take on tokenization of IPOs allowing for more exit liquidity for early seed stage investors?
Well, how's that much different from from the way it has always been done? The main difference is the liquidity. It's the fact that liquidity exists. Early seed stage investors, say you did a private placement or something like that, and you basically raise that first seed round or Series A from a smaller group of companies. Typically, you would bake in certain you would bake in a hold, basically, right, on the ability for those guys to sell, right? So potentially they'd have a 1 year, 2 year, 3 year hold on those tokens before they would be able to sell. That's kind of standard. Like at some point, there should be the option for investors to have liquidity. Now, if you call it exit liquidity, then you kind of add this word that makes it almost, darker than it really should be, right? The point simply is, if they're able to access a marketplace where they can sell, it means there are others who are looking to come in and buy that same investment opportunity. And as long as these investors have all of the disclosures and the same protections that everyone else should, then that's a fair playing field.
I think you'll also end up with a situation if you know that there's going to be a liquidity event sort of baked in earlier on, you'll probably see that there'll actually be a higher asset allocation to the original illiquid, if you want to call it, asset, knowing that there's going to be an option for an exit much earlier on. So certainly from an angel investor perspective, that is seen as a much more interesting opportunity than, say, something where you'd have to wait much longer to either get bought out or eventually go through the traditional IPO process, which we all know costs a lot of money and takes a lot of time and effort.
Yeah, the side that I think really benefits here to avoid becoming someone's exit liquidity, if you look at it from that dark term, is the ability of transparency from wallets. I think if someone does their due diligence on wallets that are available, depending on the platform, in this future realm of tokenization of real world assets, I'm just imagining a scenario whereby it allows people to go and look into the wallets of VCs or of angel investors or of family offices if they're not using multiple wallets, which we train people to use multiple wallets. But we know there's going to be cases where people aren't using multiple wallets, like we've seen with Binance keeping several billion on just one or two wallets. So it just allows people to go and look at those wallets and go, okay, these are the investors. This is the person that's holding the most of this asset, and their past behavior suggests that they normally dump at this point, or it just allows people to get just a little bit more than they would do normally. But the question that I wanted to
sorry, can I just jump in on that really quickly? I wouldn't focus as much on, you know, whether we're going to be able to peer inside the wallets of VCs, because there's so much privacy technology that's being worked on now that will actually cover up a lot of that. But what I think it will make for is a healthier startup ecosystem, because you're not necessarily going to have investors that are just looking to exit everything straight away if the value proposition or the business model is as solid as it should be. So actually, I think you'll find like people working harder to keep that liquidity, as well as attracting new investors through these mechanisms. The same rules apply in terms of having a solid business model. It's just the technology is going to facilitate a different kind or different type of investment.
I would just take our actual scenario, which is, as I said at the start, when we closed the IPO, we had raised from 7,200 retail investors, and you could see that on the smart contract when you went onto the INX token on Etherscan. And today we are 9,700 plus or so token holders. And yes, there are some who have been able to exit, you know, their positions or reduce those positions, but overwhelmingly, right, from 7,200 to 9,700 or so, you know, it's again because you're coming in like the VCs typically would at the ground level, right, on day one of that investment becoming available. So technically, why would you be exiting after the first year when really this is a 5, 6, 7 year play potentially?
Yeah, I'm hoping what it does for the space, especially in the crypto VC space, is like you said, Katie, it makes investors invest in much more credible businesses, whereas because things are regulated, rather than just this kind of what we've seen in the crypto space where it's just been a big casino. And definitely agree. Something we were saying, Keish brought up a while back, is that with the advancements of ZK rollups and what we're going to see with privacy going forward is, I think privacy and regulation kind of have to go hand in hand. If we're going to get bigger players, they're going to want to be more private. But in terms of the bigger players, a question that I want to throw out to you guys, I want to look at different asset classes and how you think they're going to be affected by real world asset tokenization. The two asset classes that I'm really intrigued by is the bond market, which is traditionally kind of seen as pretty boring and not that attractive unless you're like crazy, like unless you've got a lot of money to play around with. It's not really that attractive, especially to younger people in a younger demographic. And then the other one is the art market, whereby, as we know, very liquid but has a lot of value in it. I just wanted to get your thoughts on those two being tokenized.
Well, certainly I can speak from a US Treasury's perspective. We have launched 2 short-term bond ETFs on Swarm. So today you can go and invest in those tokens. They're accumulating tokens, so they increase in value with the yield that's generated at about roughly 4.5%. Now, of all the tokens that we have launched, so we've launched the likes of Apple, Tesla, Coinbase stock, ironically. The the US Treasury bond tokens, ETF tokens are some of the favorite. And in fact, we've had a couple of sellout days. For similar reasons that we discussed earlier, they're safe havens, they have yield built into them. And at a time when there's not much happening with the crypto market, it's a good asset to go into rather than just having your assets idling. They're actually being put to work. Now we're building out mechanisms that will then enable you to do more with those tokens. So in time, lending and borrowing capabilities, being able to go and collateralize against other activities that you can do on chain to then further leverage or build on that yield that you can then earn. When it comes to the art side of things, so there are we've got a few projects sort of waiting in the wings that we're currently working with people on, which I can't go into too much detail because it's not public yet, but essentially we're working on mechanisms that will effectively securitize tokenized art. And what that means is people will be able to not only fractionalize artwork, but also group artworks together, create tokens that represent either an artist or a group of works, which can then again be put to good use on chain. And that will then give creators much more flexibility about how the proceeds from their artwork are then used and how that's managed. But all the while doing it on a regulated securities platform, which a lot of these tokens will be classed as securities. And I think that's something that people haven't necessarily picked up on yet, or certainly didn't during the NFT boom last year or during the last crypto bull run. So these tokens really can only be traded on securities platforms like Swarm and the likes of INX.
I'm just going to show everybody your website because I love your website, by the way.
Thank you.
So as you can see, guys, the UI UX on this website is really, really clean and easy to use. See, they're working with copper. If you go back to previous episodes, we've talked about copper before and how important they are in space. And there's a really nice, simple animation here explaining about real-world asset tokenization done right. And then all you've got to do is it's fairly simple. You click invest now, do a bit of KYC, connect your wallet, and then from there, you're off to the races and you can go from there. Cool. So yeah, let's go to my next. Bob, did you want to talk on bonds and art, or is there any other interesting assets that are illiquid, like trainers or anything like that you're exploring? Because I know there's a certain type of mining that you guys are involved in tokenizing.
Well, I would, just from an art point of view, I would point to a particular security token that trades on our securities exchange, which is called the Millennium Sapphire token. And so the Millennium Sapphire was the largest sapphire ever discovered, and it's held somewhere in a vault safely in a country somewhere. And that sapphire was tokenized a couple of years ago, and those security tokens were listed on an exchange somewhere. We then subsequently listed those tokens on our exchange as well. So that's a very clear, unambiguous case of, a piece of art that is sat somewhere in a vault, but is actually, ownership of which is actually changing hands. As far as other, so the mining, for example, maybe you're referring to the Hashrate Asset Group, which is a company that is a Bitcoin miner, whereby and they're running a security token offering on INX. And the investor in that offering is actually receiving the hash rate, right? The compute and the hash rate of that mining operation. And so if you were to invest, $5,000 in that, then there's a certain hash rate that you now own as part of that entire operation. And you're then entitled to mine Bitcoin on a regular basis. And the plan of that issuer is to distribute that Bitcoin, WBTC, because we're Ethereum based, to token holders on a fairly frequent basis. So there are, there's numerous cases. There is a company on INX called TruckPal. They are a China-based freight and logistics technology. SaaS company, and investing in that is basically the token holders are entitled to a profit share, a revenue share, sorry, and that company has actually paid out a dividend via the INX transfer agent, and this was done in March, whereby the company announced a dividend, and we then paid that, into the investors' wallets.
Going to show off your UI UX as well. Most of the community you're pretty familiar with using TradingView, so you can see that you can use all your TradingView tools are here. Happy days. And then just on this bit here is where you can select security tokens that have been listed. So the INX token is there. Some of the ones that have been mentioned and some of the ones that haven't. So we can see they're all there for you. Again, cryptocurrencies are there, and then we've got the all view as well. Cool. So that's INX. So where it gets really interesting is a world that I spoke about that could happen one day, which I think is already happening on both of your platforms, which is liquidity pools where you might see Tesla token against Bitcoin token, or you might see some kind of security token in against, let's say, for example, a US bond versus USDC versus Bitcoin, which this world of DeFi and liquidity pools and real world assets, for me, just creates such a crazy space of where this can go, especially when you start looking at eventually platforms like Aave and like Euler and Balancer, some of the things that they're doing coming across to you guys, or some of the stuff you're doing going across to them.
Yeah. So at INX, we have to operate within the boundaries of the regulations, right? In our case, when we're on a FINRA approved, and FINRA is the regulator that the ATS, the regulations of which the ATS abides with. For example, security tokens can only trade against the dollar, right? So all the tokens you'll see there is INX USD and MST or USD and so on. So in that case, it's pretty clear cut. There is no, and also with the whitelisting of wallets that goes hand in hand with the KYC of investors, you can't just kind of willy-nilly, create liquidity pools using Uniswap or something like that and be able to move tokens around. So again,
yeah, I think some people have learned that the hard way, Bob.
Yeah.
No, just because exactly that, we've seen pools created on Uniswap, not with our security tokens, but with others, and they have since been blacklisted as a result. Because we share the same view as Bob and INX do, that security tokens can't be freely transferred like an ERC20 token. They have to have access controls built into them, and there are rules and stipulations around exactly who can handle those tokens. With if you're going to adhere to certain regulation, which is obviously the route that both INX and Swarm have chosen to go down. Didn't want to cut you off, Bob. Sorry, I just thought it was an interesting point you made about Uniswap.
Right. That was the exact point I was making.
Do you see potentially other exchanges trying to become regulated, or do you think that that's not really in their interest? Because if you look at the volumes that Uniswap is doing, they're mammoth volumes, and they're making obviously quite a bit off the fees. But if they were then to become regulated and had to follow regulatory compliance, it would decimate what they're doing. So do you think that's actually a hindrance for them for becoming regulated?
I can't speak to what their plans are in terms of regulation. I think what Uniswap has built is absolutely phenomenal in terms of demonstrating how decentralized trading infrastructure can work for people across the world. I mean, they've got millions of users trading what is still an unregulated asset class, right? Crypto is still unregulated, so they don't need regulation at the moment. They've just chosen to delist tokens that could potentially fall into trouble with securities regulators further down the line. But what they have as a business model works for them today. I'm sure it will continue. What their plans to do are further down the line, I can't comment on. What I can say is that Swarm has managed to solve for the security pools problem, in that Germany has presented quite a robust and very clear legal guideline as to how DeFi can operate within a regulated environment. So today you can go onto Swarm and you will see pools on there. At the moment, we've just got Apple and USDC pools. We will enable more pools, and even for people to create their own pools with a combination of securities and security tokens and crypto assets based on whatever their needs are. And I think that that autonomy is very crucial and a very important point to make, because we're not trying to just simply replicate what we already have with the likes of a Robinhood or a New York Stock Exchange. We're there to create a different trading and financial environment, a market infrastructure for people to benefit from. And that means being able to choose the products that they want to benefit from, i.e., if they want to go in, if someone wants to set up a pool that has, let's call it the Elon Musk pool, where you've got Dogecoin, tokenized Twitter, and tokenized Tesla. Sorry, I just completely had a brain fart on what his other company was. Tesla, of course. So there in itself, you could set up a pool with all of those three assets in it, and it's essentially become your own Elon Musk ETF in some respects. When you start thinking about the composability of what that then means, you can start creating financial products that suit your investment thesis, and you're not waiting for an institution to tell you what you can and cannot trade. So that's where we think this stuff gets really interesting.
You just made my brain just go.
I know, and it's late on a
wish my
Monday.
camera was on right now.
Say that again.
I wish my camera was on right now. My head just exploded. We can create our own ETFs. What?
Yeah.
Well, yeah, well,
I've
you
had
want to
so
call them
many ideas for
ETFs or
years.
not. But essentially, that's, and in fact, we actually wrote an opinion piece on exactly this topic that says, you know, DeFi pools are essentially ETF 2.0s, because you could put a whole bunch of different assets in there. You could have your tokenized real estate along with the tokenized Sapphire that Bob mentioned earlier, with your Twitter stock. And then, you know, you can start creating some really interesting products, which other people then get to be a part of and trade. I mean, the same rules still apply. You still have to go out and find people who want to add liquidity to these or trade these instruments, right? Coming up with the most obscure product might not be the best as a liquidity solution, but it's really damn interesting for explaining the use case of how this technology can work.
Definitely agree.
That's an interesting case in point on how the regulation, you know, operating within the regulatory environment allows you to then, you know, explore, you know, these opportunities. And that's, you know, like Katie was saying, that's BaFin, that's the German regulator, right? The US is a completely different animal when it comes to, you know, the current state of play of regulation of DeFi. Mm-hmm. And so, you know, we are, you know, nowhere close to that level of, call it, creativity, even though the way security tokens trade on INX, you could argue is a DeFi, is kind of a DeFi way, in the sense that it's a self-custody model, and tokens are stored on MetaMask wallets that are managed and basically self-custodied by investors, right? So again, it's really critical to understand what the regulation allows and permits. And, you know, to your very first point about what other exchanges want to get regulated, again, if you have done things and run a business model that clearly falls foul of existing regulations in various jurisdictions, it's very hard to kind of just appear one day and be like, you know what, we're going to start doing things the right way, when you've been doing them the wrong way.
Different culture. You've got to have compliance culture, and that is not, you don't just wake up one day and have it, you know?
And, you know, so and again, you know, look, the way INX has been structured from day one is to run everything kind of like by the book. And what is the book? Well, it's the book that we expect will exist at some point when you talk about regulation. So when you say investing in security tokens, well, let's look at how you invest in traditional securities, and let's just make sure we follow the same, you know, have the same compliance hat on as we offer those solutions. So again, I understand that the industry is excited about all these variations of how you can, you know, the composability of these assets. But then again, within what framework are you operating, and how would you actually protect investors, you know, from being scammed, you know, if people were able to just kind of create whatever asset they wanted on whatever exchanges they wanted?
Just because you mentioned the word book, I'm going to go to the education question, which I'm gonna let you do a bit of a shameless plug here on when it comes to a book. So for us at Blockchain Sensei, the most important thing is helping people to truthfully become qualified investors, because there's this term qualified investor and accredited investor. But as we know, not all of the time do people actually know how to even read an earnings report or look at a balance sheet, or actually even know the difference between an asset and a liability, or what goodwill is. So what we try to do is we try to educate our audience and educate people as much as possible on not just stocks, but crypto and just financial literacy in general. What do you think is missing or is needed education-wise to help further the adoption of both of your platforms?
First of all, let me shamelessly take that opportunity that you've given me there to share the book that we wrote. We put out a book, I want to say about a year ago, or just under a year ago, where we go through the various use cases of tokenization, use cases that transcend kind of everything we've discussed here. So, you know, we talk about things like recovery tokens in bankruptcy situations. For example, last year when Voyager Digital was being bid, the assets of Voyager Digital were being bid for by FTX and Binance. INX actually put a bid forward because the idea was that we would create a recovery token so that the creditors of Voyager Digital would be able to get made whole and even enjoy profits beyond once that company got restructured. So there are, these are complex topics, but then again, they're just complex ways of, the same securities or the same asset classes that have kind of existed for a while. So understanding the underlying asset classes, whether that's equity or, like you said, being able to read an earnings report or stuff like that, and then having to understand, well, what are tokenized shares. That transition isn't really huge, right? It becomes more of just an understanding of what is a blockchain, ledger, right? And how are these same shares that used to be paper-based, and I used to have them deposited at my brokerage account, are now just sitting on a blockchain. So I think the fundamental education still needs to exist, still needs to be of paramount importance. And then layering on top of that fundamental education, the new technology advancements brought about by blockchain, I think that kind of becomes an easier or not so heavy lift.
Yeah, definitely agree. I think the transition that people have at the moment, going from understanding what a balance sheet is to on-chain analysis and tokenomics, is a bit of a jump. Whereas if it was a security that they already knew and understood, and they've already done the research on that, and that's now tokenized, that would help. That's one of the main things that I'm attracted to with both of your platforms, is the ability that it will have in terms of education and in terms of onboarding. Because I think there's a lot of resistance from a lot of high net worth individuals that we speak to, where they just can't see where the money is made or where the actual business is in a lot of these token-based projects. And I definitely agree. There is a lot of them that just really aren't businesses, and that's where what INX and what Swarm can do really helps. Thanks once again, Ninja, for sharing. But you can stop sharing now, Ninja. But yeah, Katie, did you have anything you want to say on the education front?
Yeah, I think actually, I know people tout education being like a key element to all of this, which it is, but I think actually what's more important is making this stuff interesting and actually useful. So when I was at eToro, we spent a lot of time when we were trying to, when we were launching commission-free stocks around, investing in what you know and making investing very real. So, if you're seeing everyone buying the latest iPhone and not really being drawn towards Samsung products, you would go and buy Apple shares. And I think the same thing applies for this. DeFi for a lot of people seems like very, iRobot in the future, not really touching my, my world, when actually, when we start having real world use cases that really utilize this technology and people see the benefit of that, that's when I think the penny will start to drop. So we've started doing that. That's exactly why we chose public stocks and US Treasury bonds to start with first, in terms of what it means to actually trade these products on a decentralized infrastructure that was based on blockchain. And like we've mentioned before, the benefits that come with that, the transparency, the 24/7 and self-custody. That gives people an idea of what this technology can do, and then it sparks imagination around what it can be applied to henceforth. And I think one of the things we'll start to really sort of blow people's minds is when we sort of see this intersection between investing and consumerism. So having, your Tesla stock or your Starbucks stock, for example, sitting in your DeFi wallet and going out and buying a cup of coffee by lending against your Starbucks stock. That's when things become really interesting. And it's not just a case of, well, my investments sit here and it's sort of closed off in this realm of my world, but spending habits, I've got too many of those. When you start to see the intersection of the two, or those two sort of really coming together, that's when we can really educate people more on, what different asset classes are, what we can do with our assets, and not just looking at cash as sort of a spending product.
Yeah, that's the area that really excites me, is, and kind of leads on to the next question, is the future of I know tokenization of real world assets is pretty futuristic, but the future of this space is like you mentioned earlier, is when you mentioned the creating the pools. I'm looking at a world where people, let's say for example, we work with a lot of athletes, and some of those athletes are just discovering that they can invest in Nike stock, as well as they've got this Nike sponsorship, but they're just discovering, oh my gosh, I can invest in Nike stock and make this return. But
until you tell them a Nike trainer token is worth more than a real Nike trainer, that's what will blow their mind.
Exactly what I was about to say. When they'll be able to get a Nike token of a Nike trainer collection,
Yeah.
and then get a DeFi loan against it. That is when that world is what I think is coming and is inevitable.
It's a lot closer than you think as well.
Yeah, think about how that also puts the whole loyalty, how it enhances the whole loyalty model today. So for example, you walk into a Nike store and you are able to prove that you're a token holder, for example, you're a tokenized shareholder, by simply showing a QR code that shows that, this wallet contains these tokens. So for the first time, you're actually able to demonstrate that you're not just a VIP customer because you're part of the loyalty program, but rather because you actually own stock or own tokenized shares or tokens, right? And so there's a whole different way that you would have the consumer engagement model work. And then if you project that into the metaverse, where you're and then you take on-chain identity as well, which is a thing that's coming very soon. And suddenly you have a real virtual existence of not just the person through the avatars, which is what kind of most people think about when they think about metaverse, but you now have their financial existence can also live in parallel in the virtual space as opposed to in the real world.
Wow. Yeah, I think this is one of the finer episodes of Blockchain Sensei. I have to say, finer episodes of the game. We was meant to talk about a little bit about Coinbase and their institutional report that's just come out, but because I'm conscious of the time, I just want to wrap up with the elephant that's in the room, the big black rock elephant that is in the room that you can't really avoid. And I think it's the thing that's brought a lot of people that were very doubtful of the space, that didn't really trust what was going on in the space, them getting involved with Coinbase, and them Larry Fink openly saying in his interview, I think it was about a year ago, that tokenization of real world assets is something that's incredibly important that they're working on. What impacts do you see them being involved so aggressively in the space will have going forward?
Actually, 4 months ago, I think it was his letter to shareholders, and it was one of the very many very encouraging statements coming out of the traditional financial space, the TradFi players this year. So last year we had a negative, we had a push towards tokenization due to negative events, and this year we're seeing a push towards tokenization due to these positive statements and events that are happening and coming out of the TradFi space. People have to understand that traditional finance, you know, money is moving. Billions, trillions are moving between these financial institutions. And there is huge friction in many cases in the way these funds get moved. Settlement of trades can be T+2, it could take days for trades to settle. There are huge inefficiencies that lead to, you know, spiraling costs if you're these large institutions. And so there is no doubt in my mind that every single large traditional financial player has a department dedicated to just exploring and looking out for all of the, you know, technology advancements and operational improvements that can be won through blockchain. This is just natural. This is inevitable. And once these are established, and once the regulated framework and guardrails can be wrapped around these solutions, then we're just going to see the institutional money flow in. I just think that's natural. I don't think it's some kind of ominous behavior where they're going to wait till they can, you know, kind of capitalize on the thing, and then they're just going to come in and push everyone out. The technology will be there. It's kind of like the internet was there, you know, and brave souls explore the internet at first, and everybody else kind of stood back. At some point, the technology will serve various purposes, and those different groups are going to come in and leverage it.
100%.
Yeah, I think we need to be careful not to cause like an echo chamber of just people working in the space saying this is coming, everyone's going to want it. I think we need to be critical and understand what needs to get done in order for these big institutions to move in. So whilst I agree with Bob's point around, you know, all major financial institutions have people working on this technology and solutions that are blockchain based. We've also seen, you know, venture capital arms of these big organizations investing in smaller Web3 based products as well, whether that's because they believe in it or whether it's a hedge. That's up for people to decide. I think what needs to happen though, whilst we're in a crucible of circumstances where we've got macroeconomic lessons from last year, certainly in the crypto space, and then regulatory environments all coming together that are gearing up for more institutional involvement. A lot needs to be done in terms of the products that are available for institutions to move in. So just simply having, you know, spot markets for some of these products is not enough. they need to be able to margin positions, they need to be able to net off against others in a pool to make for greater capital efficiency. So, you know, DeFi inherently at the moment is over collateralized, and that does not work from an institutional capital perspective. So there needs to be more structured and sophisticated products out there in order for some of these large scale institutions to move in. Doesn't mean to say it's not happening, but they're not fully here yet.
Custody as well. Custody has to be resolved, right?
Mhm.
For institutions to be able to play. So you're absolutely right. There's you know, I think I was generalizing when I said having these regulatory guardrails wrapped around it, but the point being, if you have the right controls and the right, you know, solutions, then you can start to approach, you know, can we get some regulation around this? And then so, you know,
we can.
It's going to take time, that's for sure. But the point is, if, as I said at the start of this call, if massive costs, you know, savings can be realized, then you have the attention of whoever is playing in that space, and that's
Perfect. Right, 9 o'clock on the dot. We're gonna wrap it there. Thank you ever so much, Bob and Katie. If somebody wanted to find you, wanted to contact you, are you on any socials? If somebody wants to get onboarded or get involved with Swarm, or wants to, if someone wants to do some kind of business with Swarm or with INX, or someone's got a platform that something that they want to get tokenized, how, in fact, actually, Bob, Alex, I think your brother might need to talk to Bob. Say no more. Yeah. How would they go about doing that?
So I'm on LinkedIn. I'm always trying to evangelize, you know, tokenization, this, that. I'm going to be attending some of the big conferences in Asia. I don't think you have an Asian audience here, but just in case anyone's going to be in Singapore or in Korea in September, and maybe Berlin in October as well. As far as INX is concerned, we're at www.inx.co. Check us out, sign up. We are available in 62 countries around the world. INX actually has a native token. And so you can go on our website, you can read about the token, you can download the prospectus, you can look at what we did to, you know, to go through that IPO. You can look at our marketplace, you can see the companies that are raising capital. Follow us through our link tree. We're very active on Telegram. We have a very vibrant community on Telegram. So yeah, check us out.
Perfect.
And if you want to learn more about Swarm, the website is swarm.com. You can onboard to the platform today, either as a retail or institutional investor. We're available for both with our regulatory setup, and the platform is app.swarm.com. I myself am on LinkedIn and Telegram. Telegram, my username is @KatieEvans if you want to get in touch about any business development questions. And then you can follow us on Twitter, which is @SwarmMarkets.
Perfect. Thank you very much, everybody. Carmen, you've just tuned in. We're not doing a Q&A session this time, buddy. Thank you to everyone that's watched on the YouTube. Thank you to everyone that's watching the playback. Thank you to everyone that's attended. And most importantly, thank you ever so much, Katie and Bob, for giving us one whole hour of your time.
Thank you for
having good. It went quickly.
The gratitude we have is
time flies when you're having fun.
Oh, hi. Can I just quickly say, during this webinar, I signed up for INX. It took me like 3-4 minutes, super quick.
It's super quick, guys. INX and Swarm, very simple to use. If you've got your KYC handy and you've done it before, it's way simpler than some platforms that you've seen us use before. So yeah, any questions, reach out to us or reach out to Bob and to Katie. Thank you very much, guys. This has been another incredible episode of the game. You know what time it is. Thank you very much. See you later. Bye.
Cheers. Take care, guys.
Guys.
Thank you, Bob. Thank you, Katie.
Thank you.